Hello and welcome to Business Standards Morning Show. I am Ruchika Chitravanshi and let us take a look at the headlines for today. Lata Mangeshkar is as relevant in this age of mobile apps as she was 7 decades ago in the era of gramophones. Her voice not just spins magic, but the money too. It has been dominating the Indian music economy for decades now. Our next report offers a peek into another aspect of the veteran singer's magical voice, the business side of it.
Barring just one instance, she never endorsed a brand in her lifetime. But her death united all the brand leaders in grief. Her volume of work not just gave them momentary escape from the everyday hassle, but also offered lessons in creating and building brands. Leading industrialist Anand Mahindra tweeted, "What can you say when you no longer have your voice? Om Shanti." While Adani Group chairman Gautam Adani said, "The voice, the charm, the melodies will live on for generations to come." Kiran Mazumdar-Shaw, the executive chairperson of biotechnology major Biocon, said, "Lata Mangeshkar will eternally cast her large shadow over us and remind us of her eternal legend." Her voice will indeed eternally cast a large shadow over this subcontinent's music. However, despite her massive celebrity status, which stretched across decades and beyond India's borders, Lata Mangeshkar, unlike most other celebrities, shied away from endorsing day-to-day brands.
See, Lata Mangeshkar was beyond even being a legend. She, in many ways, personified the growth as well as the upward trajectory of the entire nation. I mean, if you see after 1947, most of the patriotic songs, much of the national hype that was created would be voiced by Lata Mangeshkar. So she, in many ways, became the voice of the nation and therefore transcended our traditional definition of a human brand. She actually embodied both the spirit as well as the might, the grit, the determination, and the ambitions and aspirations of a whole nation. So it's not surprising that she kept her distance from, actually endorsing day-to-day brands and bringing down her personal equity, which was at a much, much, much higher level, down to ordinary brands. The only one time that she did make the exception was for what she called was the friend of every singer, which is the brand called Glycodin, which would help her keep her throat in good order. So Lata Mangeshkar, far higher, far, far beyond any traditional and any theoretical definition of a human brand.
In 2013, Mangeshkar endorsed a brand, breaking her lifetime resolve. She appeared in an ad for cough syrup Glycodin. When asked why Glycodin, she replied, "I can afford anything except a sore throat." Also, while there is no consolidated figure on what her songs earned, there is a mountain of evidence on how much her voice drove the rupees 1800 crore Indian music business, which is now dominated by streaming. Consider that more than 192 million Indians tune in to some streaming app or the other every month. India's oldest music label, Saregama, is home to 130,000 plus songs. Every time any of these is played on streaming apps, be it YouTube, Spotify, or Gaana, used by short video apps like Moj and Josh, or on TV in ads and shows, Saregama gets paid. In the financial year 2020-21, the company earned 284 crore rupees, or 3/4 of its revenue, from such licensing of songs by Lata Mangeshkar, Mohammad Rafi, Kishore Kumar et al. Songs from Saregama's catalogue were streamed 85 billion times in the last financial year. Lata Mangeshkar was the tallest singer we had, Managing Director of Saregama, Vikram Mehra said. Mangeshkar's songs were streamed 6.7 billion times on her YouTube channel in the last 12 months. This figure can shock even the star influencers. The top songs on it are Didi Tera Devar Divana, Ye Galiyan Ye Chaubara, and Ho Gaya Hai Tujhko To Pyar Sajna. She has remained on the YouTube list of top 10 Indian artists along with many of her younger colleagues such as Alka Yagnik and Arijit Singh. And she has been at number 11 on the top global artist chart for over 294 weeks now. Mangeshkar's songs or videos are streamed millions of times from a variety of other platforms such as Shemaru, Saregama, Spotify and Gaana to name a few.
After the legendary singer, let us move on to India's top business schools. The latest survey conducted by Business Standard cuts the clutter and lists the best business schools of the country for you. To find out more, please see our next report.
With shortlists for most of the Indian Institutes of Management or IIMs out, and the deadline for applications at management schools across the country approaching, students are in a fix over which B school to choose. To simplify this process for prospective MBA students, Business Standard has come up with its annual B School survey. The survey ranks B schools across different categories. The final ranking of the institutes that have participated this year has been obtained by arriving at a weighted composite score comprising the audit index and the perception index. The audit index is calculated on the basis of a self-audit with suitable back checks by the B schools on different parameters. The perception index is a weighted score arrived at by merging ratings obtained from the industry, such as those from alumni and HR professionals. Each parameter has been assigned a different weight based on the directions of an expert committee. Business schools in each category have been placed in an alphabetical order and don't follow their percentile scores. The top 9 B schools make up the Super League 1. The list includes the Faculty of Management Studies under the University of Delhi, IIMs in Bengaluru, Kolkata, Indore, Kozhikode and Lucknow, Management Development Institute Gurgaon, SP Jain Institute of Management and Research Mumbai, and XLRI Xavier School of Management, Jamshedpur. The next is Super League 2. It has the Department of Management Studies, IIT Delhi, at the top. It is followed by Great Lakes Institute of Management, Chennai. IMT Ghaziabad is ranked 3rd in the category. Then comes the A1, A2, A3 and A4 categories. Students who could make it to the top colleges can choose any of them. All of them have good placement records. To see the full list of rankings, visit business-standard.com. Based on 3 parameters, namely average Indian salary, percentage of students placed, and management course fees, the survey has also compiled the list of top colleges by return on investment. This includes Department of Management Studies IIT Delhi, Faculty of Management Studies Delhi, and Indian Institute of Management Bangalore, among others. Business Standard also compiled a list of top 10 government and private colleges. While the top government colleges include the usual suspects, top private colleges are Great Lakes Institute of Management Chennai, Institute of Management Technology Ghaziabad, Institute of Rural Management Anand, and KJ Somaya Institute of Management Mumbai, among others. Indian companies, mostly the IT firms which are facing huge attrition, are hiring like never before. And it may go on for the next few years. For example, at Jamnalal Bajaj Institute of Management Studies, final placement ended within 3 days. Of the 112 firms that registered, 57 had to be sent apology letters.
A recent news report claimed that most management schools across the country were able to place all the students within hours of the placement season taking off. After the pandemic, most companies are on a hiring spree, but for them, the picture didn't look as good on the Lal Street. Benchmark indices have turned negative for the year, with Monday's 1.7% slide in the markets. Analysts fear a double-digit fall in benchmark indices is possible as markets are not fully pricing global headwinds.
Budget euphoria is slowly fading away on Dalal Street as global headwinds stare in the eye. Geopolitical tensions involving Ukraine and Russia, coupled with fear of easy money drying up amid soaring inflation, are giving a rude reality check to stock market investors. Yesterday, the BSE Sensex plunged over 1300 points in intraday trade, while the Nifty 50 slipped below the 17,150 level. The Nifty 50 and BSE Sensex tumbled for a third straight day and moved below the highs made on budget day. The indices ended nearly 2% lower at 17,214 and 57,621 respectively. With this, the markets have turned negative for the year and are down 1% YTD. UR Bhatt, who is co-founder and director at Alpha Niti Fintech, believes markets can fall another 3 to 5% from here on, as an actual clash on the Russian border is not priced in at all.
See, as far as the reasons for the market trending downwards is, one is of course the interest rate hike that has come in, talk that has come in the US, and the tightening that and the quantitative tightening that you would see, because the quantitative easing business or buying a security is going to come to an end, and they will probably have anything between 4 to 8 hikes for the next 18 months. So that is certainly a negative. Second is we have the MPC meeting tomorrow, where also I think there would probably be some talk of a hike in interest rate, tightening of the monetary situation and stuff like that. Third is internationally, if you see the Russian border crisis is sort of getting worse, and I think even the US is already sending troops and stuff like that. So therefore, there is a flashpoint there, which certainly is not going to be good for global flows. And then you have oil prices, which are scaling up new heights. So that is again going to be negative for India. They're all priced in, but an actual clash on the Russian border is not priced in. Then there is still, what happens is there is certainly some talk of interest rate hikes in the US and in India. But when it actually happens, I think there is still further sort of negative negative reaction possible, because it all depends on how the communication is worded. Because if there is a change in stance in terms of tightening is certainly budgeted, but how tight is again something that will come out of the communication. So therefore, there's therefore further possibility of market sliding down. Well, as far as the Nifty is concerned, I think 17,000 is a very important support. But if that goes, then it could go down further by another about 300-400 points quite easily. So what we're really saying is that market could come to probably a 3 to 5% downside is entirely possible.
G. Chokalingam, founder and chief investment officer at Economics Research, meanwhile, expects a 10% market fall.
I would not say that it is fully priced in,
Okay.
but to some extent it has priced in. I believe that as long as oil below, even if it rises but stay below 100, there is a possibility of another 2-3% fall in the Sensex and Nifty. But by any chance oil goes to 105-10, then we might fall 5-10% also. If it breaches around 110, 15, then we will have a problem. So, otherwise, I see another 2-3% fall in the benchmark indices.
Brent crude prices are already up 16% in a month amid simmering tensions between Russia and NATO over Ukraine. Brent is above $93 per barrel mark, but a full-scale war can take it past the $100 per barrel mark, analysts worry. Most analysts, including those at Rabobank International and BofA Securities, see Brent hitting the $125 mark by June 2022. On their part, the benchmark indices, the S&P BSE Sensex and the Nifty 50, has slipped around 3% each in the past 1 month. On the contrary, the Nifty Energy Index that comprises upstream players like Reliance Industries and ONGC has outperformed with a rise of nearly 6% as oil prices rose during this period. Going forward, market mavens suggest investors to stay stock specific and tread cautiously in the markets. These global factors will continue to dictate market trend on Tuesday as well. Domestically, investors will track the 3-day RBI policy meeting, which will begin later today. That apart, December quarter result of prominent companies including Bharti Airtel, Escorts, Indraprastha Gas, IRCTC and Godrej Consumer Products will be on investor radar. Moreover, shares of Adani Wilmar will also debut on the bourses today.
Budget euphoria may well be waning away on Dalal Street, but some of its announcements are still fresh in people's imaginations. Virtual digital assets are one of them. Our next report tells us more about it.
The government, in the Union Budget for 2022-23, introduced new provisions aimed at taxing and tracking virtual digital assets. Along with the framework for taxation, the budget for the first time defined virtual digital assets. The Finance Bill has defined virtual digital assets in the newly inserted Clause 47A under Section 2 of the Income Tax Act 1961. Regardless of the nomenclature used, VDA has been defined to mean any information or code or number or token generated through cryptographic means or otherwise, and which can be transferred, stored or traded electronically. Apart from the above three criteria, one of the following two conditions needs to be fulfilled to qualify as a VDA: providing a digital representation of value with the promise or representation of having inherent value, or functions as a store of value or a unit of account, including its use in any financial transaction or investment. The definition of VDA also specifically includes non-fungible token, that is NFT, or any other token of similar nature by whatever name called. The definition of NFT will be specified by notification by the central government. Generally speaking, an NFT is a digital asset that exists on a blockchain, allowing anyone to verify its authenticity and who owns it. Digital art, images, videos, text, music, and even virtual real estate and in-game items can be bought and sold as NFTs. The Finance Bill also authorizes the government to specify any other digital asset as a VDA or exclude any digital asset from the definition. Notably, Indian currency and foreign currency as defined under the Foreign Exchange Management Act 1999 have been excluded from the ambit of VDAs. While virtual digital asset includes cryptocurrencies, the definition can cover a wide variety of digital assets which is implied by the wording or otherwise in the phrase generated through cryptographic means or otherwise. The definition is also made exhaustive with the words information, code, and number. Because of the broad definition, VDAs can potentially include vouchers, reward points issued by shopping websites or credit card companies, airline miles, etc. Experts have sought clarifications from the government in this regard. They fear the scope of VDA may impact digital assets created by companies.
That's all we have for you today. We will be back with more news and analysis. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.